How is the trade story? When you look at the trade story and you think about what's happening in the fixed income story, how do those two things fit together for you?
Well, I think it's probably the most exciting time in fixed income for the last 10 years. We've pretty much seen a complete low interest rate environment for years and years and years, and now as we go into 2018 and through the year, we've seen the first rate hikes and the yields going up on the bonds. So it's very interesting times for us.
And do you think that continues? That this is kind of the trade story globally? We could potentially see this kind of hit growth. That might start to alter some of those. Probably less for the Fed, but other central banks may decide, you know what, actually, with all these other things going on, is now really the time to add a sort of a crunch, another crunch into the markets.
Yeah, I mean, I think obviously the Fed, it's pretty much 25 basis points in September is pretty much priced in to the market from the Fed's perspective, and I do think there's now a divergence of opinion. So one of the most exciting things in the bond market for us at LiquidityEdge is that there's actually opposing opinions. Have we topped out?
Two-way market.
There's a two-way market, exactly. Have we topped out at 3.12% on the 10-year yield? Will we see 4% by the end of the year or not? And I think for the first time ever, well, not for the first time ever, but at least for the first time in some years, we are seeing a two-way market in terms of opinion.
And how does this, is that the same in Europe here as well? Europe feels further back in the economic cycle. It's got a central bank that's probably feeling a lot more cautious right now. The search for yield still feels like it's on here in Europe. We've still got sort of heavily negative rates. So does the US and Europe feel like very different places at the moment? I
think so. I mean, obviously my focus is in the US, and I watch the US markets more closely, but I do think it's very different, very different.
Like the spread between bunds and treasuries is massive.
It's massive. Yeah, absolutely massive, yeah.
So in terms of the way that the Fed is going to progress from here, we get minutes later on this week. Is there an expectation amongst people you're talking to in your your thought process that the Fed's going to start talking about trade? I don't know how the Fed prices trade in. And then we get the payrolls data, which could kind of give us completely sort of conflicting story that the US economy is cracking on. Forget the trade story. It's not having any impact. And we still don't know when this kind of wage story is going to kick in.
I think so. I mean, if GDP growth and there's inflationary expectations, then I think the Fed has to continue on its path. But of course, the spanner in the works is going to be the trade situation with China and what happens there.
What's the most important factor? Is it the Fed raising rates, or is it the Fed reducing its balance sheet?
I think for us, it's the Fed raising rates, but I mean, I'm not an economist, so...
But in terms of the way that it affects the market, because you've got a huge amount of supply coming in, the Treasury in the States is kind of pumping it at the front end. You've got the Fed tightening up in terms of its QE program, and you've got it raising rates. So there's a kind of whole bunch of factors that are coming in that are making the yield curve, the shape of the yield curve... flatten quite sharply, and I'm wondering whether that continues.
Yeah, I mean, obviously, what the Fed does drives the short end of the curve in terms of the yield, and the inflationary expectations drive the long end of the curve. And depending on what happens there will determine, obviously, what we see in the coming months with the yield curve. But I think we will continue to see a flattening of the yield curve.